Welcome back, everyone. Yesterday, the Federal Reserve indicated it'll raise interest rates in March to try to ease inflation.
And that could impact your money. Here's I-Team consumer reporter Samantha Chapman. Sam?
That is right, Terrell and Tanya. So interest rates impact your finances in several ways. So we're going to bring in Craig Bolanos. He is a financial expert with Wealth Management Group, and he joins us live with the 4 things you need to do before the Fed raises those interest rates. Good morning to you, Craig.
Good morning, Sam. Great to be here.
So before we get into those steps, I have to ask, because this concept kind of goes over some people's heads, myself included when I first heard about it. So the Fed is going to raise interest rates to help reduce inflation, kind of help people understand why that is.
Sure. With inflation being more stubborn and persistent than people acknowledged, the Fed needs to raise the cost of borrowing. And as we raise the cost of borrowing, consumers are less likely to spend excessively. Businesses are less likely to borrow on speculation, and that slows the rate of inflation growth over time.
So almost kind of keeping us consumers in check and keeping our money a little closer to us. Okay, that makes sense. So you say that the first step is to refinance your home. Explain why.
Well, we haven't seen a 4% mortgage since 2014. That's been 8 years now, and interest rates are steadily moving up. And I think anybody in the residential housing market needs to start looking at locking in better terms and conditions while they can before the interest portion starts raising their monthly payment.
Interesting. And number 2, you also talk about refinancing your private student loans. Talk about that.
Oh, absolutely. Now, don't touch the federal stuff because you still have 0% interest and no payments all the way through May, courtesy of the president. But if you have private loans, the interest rates are going to be going up. This is kind of like last call to refinance and consolidate with great terms and conditions.
And then let's get to number 3. This is typically hard for a lot of consumers, especially coming off the holiday season. Pay down your credit cards. Craig, that is easier said than done.
Oh, it's easier said than done, but all of us, so many Americans, we wake up with a financial hangover every single January, and now is the time to start taking command of our finances. And while interest rates aren't that bad, get more money attacked to that principal so you don't find yourself extending those payments into next year's holiday season.
Okay, and then number 4, something that some people might also find a little bit challenging, improve your credit score. How can we do that?
Well, there's so many things, but I think it just starts with a commitment to saying this is going to be my year, not tomorrow, not next week, right now, today. Get a budget, start telling your monies where to go, pay down that debt, create an emergency reserve, and make yourself look like a good, viable person to lend money to so you too can get the most competitive rates on any of those consumer products you and your family might need now or in the future.
I like that, Craig. This is going to be my year. Let's keep that energy. And Craig, happy birthday to you, my fellow Aquarian. Really appreciate you for joining us so early on your birthday. We really appreciate you.
That warms my heart. And a little birdie told me you may have had one yesterday. So happy birthday back at you.
It was on the 25th. But okay. Yes, and we are fellow Aquarians. So, we had that energy. That's why when you said, this is going to be my year, I said, this is my kind of guy.
Thank you.